Hey, good morning, everybody. Welcome to our morning volatility report. This is Ian Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to our morning discussion on vol. Besides Apple, which is probably the cheapest volatility in the world, let's go to the second cheapest. Oil. Oil implied volatility is getting to a spot we haven't seen since kind of oil prices crashed. Even kind of in the good old days when USO was a $20 product. Remember before on its way, I think, what was it, a $40 product? So it's suffered a bunch. Vol is down. I think actually long-term vol buying in there kind of makes sense. We'll look at it in our chat room today, but just buying calls. There seems to be a little bit of a lift in commodities, things like that, but it's just too cheap. Almost like the market is saying it just can't ever move again, which I don't really think that's the case. Anyway, we'll look at that in our chat room today. From a VIX point of view, let's just look at the last 3 months. We are 30 cents away from a low close. 1130, I think, is the low close of the year. We could see that again. That the electoral college thing went through. We are getting no blip at all from the Russian Turkish thing. The market seems to price in any and all terrorist activity, at least all the just your garden variety nasty stuff. And so again, from a VIX point of view, you just have huge contango. The futures really are not going to; they are drifting slowly. The serial future is $3 above cash. All this stuff just puts a lot of weight on VXX and UVXY. It makes XIV fly. It makes SVXY fly. Note you're just getting larger moves in all of these. And VXX just keeps sinking and sinking and sinking and sinking. VXX is decaying like 25 cents a day. Okay, so again, if just VIX cash stays here, if the market's doing what it's doing here for the next 3 days, VXX will be down another $1.50 by next week. Don't forget that future premium, it will come out from the weekend, right? So it does plan on VIX resetting, but still that stuff can get lower. Mark was even looking at UVXY. We could see 6 by early January. VXX, you could see 20. Just really low numbers. If realized vol, if VIX just stays this low. Almost all of the value of VXX now, and it's today Tuesday, it's probably 99%. It's 100% today. Is in this future at 1445. Now, a lot of times during this year, for the first 4 months of the year, 5 months of the year, 1445, where we couldn't break 16 on the downside. Now we can't get above it. So as far as reverting vol goes, we can wait a long time. So there's a lot of weight on those vol products. So most of the stuff we have in our strategy letter revolves around more erosion of the vol products. Those are all things we're going to cover in our volatility class January, February, for those that are interested in learning how these things work. So again, you've got vol grinding lower. You have the market kind of grinding higher. We're not really getting any big bounces out of anything anymore, although the short worry probably about the banks, I think maybe a little bit of the bank sell-off was that electoral college thing, the Hamilton electors and all that, and then there was a little bit of panic, a little bit of sell-off. But right now, if you just look at, there's no other more bellwether name than this. Is very close now to its, at this point, with the vol up here, we like selling put spreads, and the banks out of the money put spreads. The volatility is still kind of juicy, And I think at least until the inauguration, I think that's not a bad trade. It has not gone away, and they're still giving you. You can sell way out of the money, 10, 15% out of the money for put spreads, and still get decent dollars out of them. So, with that, there's not much changing on that score. The one thing I will note though is, again, and I don't know if we're going to have some capitulation at this point. It's already, we've had a major, that's almost a 20% drop. We've dropped $20, near $20. So it's about a 20% drop from the high, something like that, a little less. Let's say 18%. But are we testing the $1,000 level? I'm looking at this. I'm looking at how volatile this product has been now. Its market is implied volatility is still pricing some move here, right? It's still pricing a little bit of move. It's not. It isn't. Let's just put it this way. It's not a we've sold it off and it's done type of vol. So sometimes you look at something that just is so kind of sick like gold is right now, and the vol kind of sags and sags and sags because nobody cares. You haven't seen that. At least the volatility it's holding up at these levels. It's not going to all-time lows like nothing's going to happen. So we could structure a couple things in here based on, I think there's still some potential movement in gold. I don't think it's gone away. And we can look at some trades in our chat room today on that. Again, it's the classic, I want to have some gamma, but I don't want to pay any money for it. So have your gamma for free. And if you don't know how to do that, you need to come to Option Pit and learn how to create positions like that. And with that, I will see all of you again. We're closing in on the Christmas holiday. All right, everybody, have a good day.